Okay, folks, good morning. Good morning and welcome to Swing Trading Today. This is Bob Desmond and it is 5:01 in the a.m. Eastern Standard Time, November the 11th. Before we kick off today's show, I want to point out to you, I'm going to drop this link into the chat box. It's also, for you guys watching it on the replay or wherever you might be watching it, TrendSpider has, it's now only a 60% discount and declining as of tomorrow to 59%. So jump on it. I've never seen it this low before. We'll be using it today to illustrate the power of having. It's like having an arrow in your quiver regarding technical analysis. And for those that are new to technical analysis, what I think you get most value out of is A, manually drawing your own trend lines, and then, as I'll show you later, use the automated trend lines to proofread whether or not you got it accurate or not. I do have some chart requests to go over here. So I have Twilio, TDoc, DHI, which I think I went over the other night. Yeah, I did go over that. So at least Twilio and a couple other names. Let's get to it. TrendSpider, again, 60% off. Let's go to the markets. So the first thing I want to kick things off with is Rocket Mortgage. And they reported earnings last night. And we'll see how well they're doing in the pre-market. They were down initially, and they're still down somewhat, but no great move here. Overall, a good earnings report. They're buying back shares, big growth. $1 billion buyback plan. So I'm hoping that they drop it down further, and we'll step in and we'll buy some more. We have the Nasdaq in fuego this morning. If you're looking at Rocket Mortgage, you need to take a look at bond prices as they trade inversely of bond prices. Bond yields have been surging of late. That's keeping a lid on Rocket Mortgage. But the other banks, they've been doing pretty well. I want to bring up DPST, which is a regional bank ETF. It's behaving well. So something's going on over at Rocket Mortgage that somebody just doesn't like. TLT down yet again today. Don't forget, on Thursday, folks, we're going to be getting together for happy Veterans Day. I forgot to say that. My family, big military family. Happy Veterans Day to all of our heroes out there. Thank you for what you do. The TLT down this morning. I'm going back Thursday night. Thursday night stock charts live. We'll be going over the weekly charts. I can't believe it's almost Thursday already. Tomorrow night, 6 p.m. Eastern Standard Time. Use the link below. 15-minute alert prior to us going live. We're looking to short Cooper Standard Holdings today. Ideally, they spike this sucker up, and we will be looking to short into it, possibly using put options. If not puts, if we can grab the common, if they're available, then we'll be shorting the common stock. Let's go to the pre-market activity, the Nasdaq futures. I didn't say this yet, folks, but this is a 4-hour chart. These will all be 4-hour charts, unless I say otherwise. Nasdaq, big reversal bar overnight. Here. We recaptured support. They're going to rally it further. We are up just shy of a percentage point at current. Now, the 800-pound gorilla in the room for tech, which is predominantly what the Qs are, is this. Weekly chart. I went over this with members last night on Market Wrap. The 10-year yield. We closed out the day yesterday, the first closing high above the 50-period moving average here in blue. For the first time since November of 2018, folks. This is an event. Now, we haven't closed out the week yet. And I do believe that probably next week, we're going to roll over here a bit. We're a bit extended on Stokes. We're going to get one of these numbers. We rally, get extended, we roll over, probably higher or low. I think that we're going higher on yields longer term. So keep an eye on this. Because the bank stocks are doing well at current. What's going to keep them doing well? Hey, good morning, Trisha. What's going to keep them doing well? You have a threat of a second national lockdown coming. If, in fact, we do get a President-elect Biden, which is going to the courts now there was an injunction filed overnight in Michigan alleging voter fraud. We kind of knew this was coming because of those Dominion machines. So we'll see what happens here. But the presidential race is still in a state of flux. I think it's a long shot that Trump does keep the office, but you never know. So as it stands right now, I don't think these markets are pricing in a second lockdown. So that should be concerning for everyone. All right, so we went over the Nasdaq, moving up higher. U.S. dollar continues to catch a bid. In fact, it capitalized on gains by closing above resistance yesterday, pulling back, retesting support, and holding. Do we follow through? It's a good possibility. So gold, last look, it was barely holding on to gains. Lethargic at best. Our gold mining trade, which is still profitable on, is just barely hanging on to support on a daily time frame. So we're going to probably cut and run, book some profits if, in fact, we begin to break support, which is where we closed yesterday on the GDXJ. Seasonally, not a great period of time. We'll revisit in late December. Ideally, we get a hard sell-off. We'll buy back into that sell-off in anticipation of a January rally. Copper prices. This is our proxy for global growth. Consolidating gains. Oil, another proxy. Light sweet crude, ripping up 3.5% on the session. Let's check out our XOM. XOM moving up higher. Good. The ex-dividend date was yesterday for XOM. I believe that's payable on the 12th. That's 87 cents per share for Exxon. Nice little paycheck. Let's take a look at how the Dow is doing. Dow continues to rip up higher here. Both the Dow and the Dow Transports were very correlated yesterday. Both flashing bullish reversal bars. Chris, good morning to you. You know, I'm not gonna mince words here. I don't get what's going to keep this market going. I just don't get it. I'm trying to understand. I'm trying to rationalize this move up here. You want to call it clarity about the elections? I don't think there's clarity yet. Here's the valuation, percentage of stocks trading above, or the number of stocks trading above with a PE of 20 or overvalued, the S&P 500. We're at arguably, not arguably, we're at all-time highs here. Last time we were anywhere near this extended was back during the market peak spring of 2000. Remember it well. I remember it very, very well. And it was only days before the ultimate pop that the market didn't seem like it could ever go down. Circa where are we now? Breaking out. Very strong market. The difference here is that back in 2000, we peaked out in Q1, which includes, just Q1. That was the winter of 2000. And in the spring quarter, Q2, we never validated, we never made a new quarterly high. Actually, no. This included March, Q1. It's early. First cup of coffee. Q1, we did put in a new all-time high, yeah. And then we stalled out to the next quarter. So this quarter, we still have some momentum at its back. We'll take a look at, do we close out next quarter strong, and do we put in a new high Q1 of 2021? We have lower highs in RSI. So we have a negative divergence there. We've already put in lower lows, despite we're putting in all-time highs. Volume is arguably light this quarter, very light. Lower highs, ultimate oscillator. Aggie, 93. Underlying strength of the economy is better than what people think. It could be. You know, I like the assumption. We have to go by assumptions at times, because you have to ask yourself the question of, why is copper ripping? My answer to you is, why does it seem that COVID is only in the Western world? Why are economies booming, such as Vietnam? They're booming because of the supply chain shift out of China. So is it a U.S. growth story, or are commodities ripping up higher due to the fact that you have growth elsewhere in the world? And with the threat of a second lockdown here in the United States, I don't think that people realize how real it is that President-elect Biden, he's campaigned on locking down this country, and he's reiterated it after being coronated president here. So I think it's being discounted. So it's definitely a concern out there. Might there be underlying growth? Sure, but is it going to be sniffed out or snuffed out? JA, because of Nancy Pelosi wants to ruin the USA. There's something nefarious going on. I don't want to get into politics because some people get upset with me, but like I've told people in the past, if it feels wrong, it's probably wrong. So I'll leave it at that. This is from Missouri's. The most valuable company list, which I value more, is solid. I think is because we are getting more of a free market now with Biden, and we open the floodgates to more outsourcing. So do you view that as good or bad? Here in North Texas, it looks no different than pre-COVID. So business is good there in North Texas? Light sweet crude coming back should be helping you out. Nat gas was correcting earlier. It's still correcting. Bonds catching a bid here. We may rally. Bonds have gotten hammered, as I just reflected or just showed on bond yields. Very extended. Taking a look at some ag names. They're catching a bid. Big move higher yesterday on oats. Our little egg company, Cal-Maine Foods, had a really good day yesterday. I think that's going up higher. Where's wheat or corn? Here's wheat. Wheat on the verge of a breakout. Flirting with one at current. So it looks like ag is going to catch a bid here. All right, let's take some chart requests. I'm only going to go to 7:30 this morning. All right, so I have my members list I have to go to first. Twilio, which I use. It's a cash machine. For those folks who's joining in, 60% off of TrendSpider. There's a link in the chat box. I'll drop it in there again. I've never seen it this low. So take advantage of it. All right. Let's go to Twilio. This is a cash machine. I know I use it because they bill my American Express card about twice a week to recharge it for the SMS text alerts we send out. All right, so the shares are under pressure here, or have been under pressure. Let's get these Stokes off. There we go. All right. Let's throw up our automated trend. We already have the automated trend lines up. Let's take them off for a moment. All right, so we had a breakout here. It failed. So we need to revise this a bit. We are in a confirmed downtrend. Hopefully I didn't lose everybody. 270 per share is resistance on Twilio. Let's take a look at the weekly time frame to identify where we're at historically. We've broken support. Let's get rid of this alert. Ooh, I'll tell you, if we close down below 270 this week, that's a problem. I think we can head all the way down here to 250 per share. You know, they'll probably pop it up higher today. We closed where yesterday? Closed 266 spot 26. 270 is not that far away. I think they'll probably pop it up higher. If they manage to close it up above 270 per share by Friday afternoon, 3 p.m. or 4 p.m. Eastern Standard Time, then it'll be a buy. Right now, it's a watch because we're hoping, if we buy it right now, we're hoping that's going to close above 270 per share rather than fearing. I'd rather fear than hope. We have support at this moving average here. Let's go to a 4-hour chart. Yeah, it looks like what they're going to do is they're going to pop it. Yeah, an inside bar the last 4 hours yesterday, and they're going to take it up higher. So I'd be watching for resistance. If they're able to get some momentum behind it, up at 290 per share before we settle back. Stokes are very weak. RSI remains weak. Volume declining sequentially. But I do believe that they're going to rally it off of this 20-period moving average. The question is, do we take out prior highs or do we fail? That is the question that if you get long, you need to keep front and foremost in mind. It's a great company, but remember, this market is very, very overvalued, extremely overvalued. Circa March 2000, overvalued. And we do have a short position. At some point in time, I plan on leaning into it very heavily. Once the market sends us a signal, and you'll know that signal when it comes. All right, let's go to I'll take a couple of requests if there are any out there. T-Doc. But I do need to log off in like 4 minutes. This is Teledoc. Horrible week. We're in a confirmed downtrend on a weekly time frame. If we close out the week below 180 spot 33, the stock's in a lot of trouble. Here's the automated trend line feature. We can head all the way down to, assume that the the 200 period moving average here. We'll try to hold first. Then down here at 140 per share. So these shares are under a lot of pressure. Daily chart. Yeah, I would be very careful here. I think that we're probably going lower. Here's your lower high, and this is a classic double top. This is a weekly chart. We're not using a daily chart, so we're pulling back. We're taking a look at the chart from a higher level view and getting a feel for where we are at, where we've been, to identify where we might be going using multi-time frame analysis. And here is your double top. And that means absolutely nothing until you break down and put in new lower lows. We're there. Double top, lower high, and a breakdown to new lower lows. This is confirmed. Our Stokes are an absolute basket case. RSI, same deal. Under institutional distribution as noted by the volume bars. Be very, very careful here. Daily time frame. We're going to pop here fairly soon. That doesn't mean we can't go lower. But we're extended to the downside. We'll probably get a counter trend rally similar to this. But then we're probably going to roll back over again. Be careful, folks. You know, this is the market sending signals, and it has been. RSI peaked out in March of 2020. What were the share prices doing? As RSI put in lower highs and lower lows, along with the stochastics, except for this bump up here, share prices were moving up higher. It's a negative divergence on RSI, textbook. That's the market sending signals. And we can complain that the market is rigged, this, that, the other thing. Algo's this, slick back salesman on Wall Street that, CNBC did this to me. All you got to do is take a look at the chart. What are our indicators doing? Are they validating share price? If no, avoid. And that would have saved you from getting hammered here. AMC, that's an interesting chart to take a look at. Wasn't there a threat of bankruptcy there? Did that ever take place? You know, I don't get it. With all the talk of a second lockdown, I'm not exactly sure why these names would be ripping. You have a lot of resistance back here at 380 per share. I think the best thing that could happen with these shares is pull back, set up for a higher low, and they could be bought. I'm going to assume that there's a tremendous number of shorts in this name getting squeezed. I don't think this is investable right now because I'd be concerned, honestly, with ongoing concern issues. XLE. We are long of Exxon Mobil, quite long, and it usually trades in tandem with the energy sector. Energy is doing well today. Oil is up today. Nat gas still a little bit weak. But taking a look at the chart from a higher level view, again, Where have we been to identify where we might be going? And it looks as though, despite the rhetoric about a second lockdown, the markets don't care right now. They're not believing it. Energy is breaking out. A major league breakout. So here's your W formation. This is the value of using higher level view charts, meaning weekly charts, monthly charts. If you get too down low, if you're a day trader or you're a swing trader and you're trying to get that grand opportunity and you're looking at a 4-hour chart, too close to the fire. Pull back. Monthly chart. What are we doing? What's the setup? You have a W formation, a massive one. And we are breaking out. So energy is looking top-notch at current. Weekly chart. Nice weekly breakout. So the path of least resistance is now changing from bearish, meaning bears are in charge, to bullish. Daily chart, we have more upside here. I think energy, XOM, all these names are moving up higher with the market. But beware, this is a very, very expensive market, folks. And with that, I'm going to say everyone have a profitable trading day. Thanks for joining in. Smash that like button. And don't forget about that TrendSpider offer, 60% off. And it drops down tomorrow to 59%. So take advantage of it. Use that link in the chat box. I'll drop it in one last time. And it's free with our silver and gold level memberships. Everyone have a profitable trading day and be well.